In this video, I'm going to share with you the magical secrets so you will never, ever lose any money investing in cryptocurrencies ever again. Or well, there really isn't any magical secrets, and the reality is that investing does carry risk. The idea, though, is not to take on too much risk, in that your risks that you're taking are calculated and that you're able to make more money than you lose money by investing. So in this video, I'm going to share some practical tips and tricks that you may want to keep in mind if you are a cryptocurrency investor, especially if you have been having a hard time in the market over the last few weeks as things have been getting pretty gosh darn rocky. I know a lot of investors have been losing a lot of money, so I want to share some of my thoughts on how you can minimize those losses and hopefully actually stop losing money investing in cryptocurrencies and start making money investing in cryptocurrencies. My name's Lark. Every day I make videos talking about cryptocurrency investing. So if that's a topic that you would like to learn some more about, then make sure that you subscribe to the channel, tap on the thumbs up button for the old YouTube algorithm, and of course click on the notification bell to know when I put out a new video. By the way, every single week my team and I produce Wealth Mastery. It is a cryptocurrency investor report. Every single issue of this report, you're going to get a deep dive altcoin report, a trending coin analysis, an interview with an industry leader, top tier technical analysis, a step-by-step DeFi tutorial, the latest token sales, the latest airdrops, and much, much more. All of that for less than $10 a week, meaning that this is the most value-packed, at the same time, the most affordable investor report on the market. Click on the link down below me here to learn more and become a member today. Now let's go ahead and dive into this topic. And yes, we must point out here that investing carries risk. But it doesn't have to be nothing but getting your butt kicked all the time and losing lots of money. And if that's kind of how you're feeling in the market right now, there's probably a few things that you may want to adjust a little bit. And I think that these big market corrections like we've seen recently actually give you that time to reflect, because it's really easy when all the markets are just going up all the time, green candles everywhere. It's really easy to get really greedy and to let your thinking brain just kind of stop working and let the lizard brain kind of take over and go, gonna get rich, go, 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 go. You actually need to bring it back a little bit from time to time and think, what the heck am I doing here? What am I doing with my cryptocurrency investments? Why am I investing in cryptocurrency in the first place? Am I a crazy person? Look at all the money I've just lost. Well, unless you've clicked sold to sell your cryptocurrencies, you haven't actually lost anything until you click on that sell button. Chances are, if you made good investments, the long term is going to be a very different thing. So let's try and boil this down a little bit here. So the first thing I want to talk with you about is actually having a freaking plan when investing, man. So many new investors fall straight into one of the first possible traps you can fall into, which is just FOMO buying everything you can get your hands on because it's all going to go up. I'm missing out. You have to have a plan when you start investing. Actually sit down, think about it. And if you haven't had a time to sit down and think about your investing plan yet, get out a pen, get out some paper, sit down and think about your investing plan. Obviously, you want to make money with these investments, but what was your plan when you came in? So let's say, what's your plan with Bitcoin, right? Do you have a sales target for your Bitcoin? When are you buying it? Or do you just throw all your money in at the top and hope for the best? Because having a plan, it means that you have thought about what you're doing. You've studied, of course, what that cryptocurrency is. You have reasons for buying, and actually write those reasons down. I'm buying Bitcoin because, I'm buying Ethereum because, and I will sell my Bitcoin or my Ethereum or my altcoin, whatever it might be, under these circumstances, either when I have a profit level that's been reached, or if something changes that will change my mind. For example, Ethereum doesn't deliver their technology when they say they're going to, maybe I will reassess my investment. Or for that altcoin that was promising to do really, really big things and they just kind of aren't doing it, that's a reason that would make me want to sell that investment. A price correction should not necessarily be part of that situation. These corrections come in the cryptocurrency market, and actually having that plan, writing it down, being able to look back and remind yourself like, hey, why did I actually buy this cryptocurrency? What am I doing here? That's going to help keep you really disciplined on these big, dramatic market event days. And also, if you have been just FOMOing into every random coin mentioned by an influencer online and you haven't really stopped to dig into what's going on, take some time and freaking study what your investments are about. You should understand to a relatively good level what it is that you have bought. What's that coin do? What's the emission schedule like for the tokens or the coins? What is the investment potential of that? How many users are there? Is it being used? What kind of partnerships are there? Stuff like this. Get that information. Be studying a little bit all the time, and the more your portfolio expands, the more you need to study. So you can also just keep it simple. If you don't have a lot of time on your hands, just keep to some of the big boys, keep to those safer plays, your Bitcoin, your Ethereum, your Chainlink, right? Stick to those safer plays in the market. If you have the time, then go and study into that smaller market cap stuff that does have a bigger growth potential, but you have to have the time. You should be learning about this asset class all the time. Because here's the thing with crypto. It is a new asset class. It's changing every single day. And you've got to stay on top of it. You've got to be learning and engaging in order to have the most success from your investment in this asset class. The next tip here for you is to understand the timeframes of your investments. Is your investment a long-term investment? Is it a medium-term investment? Is it a short-term investment? There's nothing wrong with short-term investments, but just understand what a short-term investment is and when you're making it. For example, for me, Bitcoin and Ethereum, those are long-term investments. Those are cryptocurrencies that I'm investing in with a multi-year time frame in mind, whereas quite a few of the altcoins that I'm getting into, I'm looking at those as shorter-term investments, and sure, maybe I'll keep some moon bags for some of them to see what happens to them, the ones I'm really bullish on. But some of them, they're just short-term positions. I see maybe the momentum coming in, or I think, hey, this has got potential to do something over the next couple months or the next year. It's a shorter-term play, and you have to keep in mind that it's a shorter-term play. Obviously, as well, with a long-term perspective, for things like Bitcoin and Ethereum, maybe some of the other top assets like Cardano or Polkadot, whatever it might be, you should be looking to dollar cost average into positions. So instead of just FOMOing all of your money in at the top, you're just adding a bit here and there and here and there. And then you have money, of course, waiting on the side for these rare dip situations that do happen in the market. So instead of buying the tops all the time, you're waiting to gobble up the massive dips when they come. And they do come in the market. If you've been looking at the charts, if you've been following along with the channel, what have I been talking about all year? Every few weeks, every month or so, 6 weeks, whatever it might be, there's a massive dip in the market. Things might go down by 30, 40%, 50% for some altcoins. That's the time to buy. Not after that altcoin is at a new all-time high. It's not, sometimes you can buy there, but for the most part, that is the highest risk time to be buying when everyone's talking about this is the new big thing, this is the new paradigm of money, yada, yada, yada. What you really want is to find those high fundamental value coins that are kind of boring. No one's really talking about them at the moment. Wait for the prices to come down, then you buy on the dips. Buy low, sell high. Not the opposite. That's how winning is done. And of course, if you have done your research, if you do have a plan, you're probably also not going to want to panic sell after a 30, 40% market dip. If anything, you're going to understand, well, I made my research, I have a plan, and I've got money on the side because I'm ready for dips because I know they happen all the time in the market. And then you buy the freaking dips. Next, let's talk about risk, because I think a lot of people, a lot of investors that are coming into the market right now, potentially new investors, potentially the first time you've ever invested in anything. Maybe you've only invested in a few stocks, and now here you are throwing your money into meme coins because something dog coin money go up. You have to understand that this asset class in of itself is very risky. It's highly volatile. And the farther down the market cap rankings you go, the higher risk you have. So when we start talking about risk in investing here, let's do with some simple things to minimize that risk. So when you're getting into one of these super high speculative altcoins, keep your position sizing low. Maybe it's going to be 1, 2, 3, 4, 5% of your portfolio, but don't go all in on a random dog meme coin. I know what you might be thinking, but if that does 100x, then I've made so much money. But what if that does a minus 99% move, which happens all the time for some of these super speculative assets? In that situation, you've lost your entire investment portfolio, and it's now going to take you months or maybe even years to recover. You're basically gambling at this point. You need to be taking calculated risks with your investments and thinking like an investor, not like a gambler. You should also be predominantly, especially if you're new, only buying on spot. You buy and hold. So spot means you're actually buying the real asset. So you go out and you buy your Bitcoin, you buy your Ethereum, you hold on to that, whatever other cryptocurrencies might be buying. You don't need to be using leverage. Leverage is a tool for experienced traders. If you are not an experienced trader, you really don't need to be playing around with that stuff. It is a quick route to getting in trouble. So do keep that in mind. Leverage introduces a whole new range of risk for you. And if you do have to play the leverage game, and look, I leverage trade from time to time. And again, it's only for people who understand the risks and what they're doing. But if you are going to play the leverage game, even if you are an experienced trader, just remember, keep that leverage low, keep the position sizings low. Otherwise, you can get wrecked real quick. The next tip is to protect your capital. Now, there's a few different ways you can do this. One, which I think is a great way, is to take your initial cash back out of a position after it's gained quite a bit in value. So let's say you buy some Litecoin for $200, it goes up to $400, you take out half of the money. So now you've got all of your initial investment back, and you have now 50% of your Litecoin still left. It can go up, it can go down, whatever. You got your capital back, so you protected your initial investing capital. That's that money that you worked your butt off to get. You can now feel a little bit safer at night. You can rest a bit easier knowing that if the price goes up or the price goes down, you're not going to lose. It really changes the dynamics in your brain as an investor when you have, you're not going to lose your life savings or something like that. Not that you should have put your life savings in the market anyway, but getting that capital back out can really change your perspective on your investments. And of course, never invest more than you're willing to lose. Never buy on credit. Again, this is about reducing the risk here, right? And another way that you can be protecting your capital is by actually going back to your plan. Remember that part of the plan that we're thinking about here where, well, if something changes with my cryptocurrency investment, then I should potentially consider selling it. Well, that is another form of protecting your capital. So if you went into a certain cryptocurrency with an expectation that they're going to deliver this kind of technology or this kind of user base or this kind of network effect, whatever it might be, and that doesn't happen with whatever time frame you've set out here, well, it might be time to cut your losses. Remember that selling some of these cryptocurrencies, it's not necessarily a bad thing to exit position when you've changed your opinion on. Again, that's not just because the price of something has gone down during one of these big market events. You could find yourself very quickly selling the bottom and having to rebuy the top. That's not what you want to be doing. That's what I'm talking about here. I'm talking about when you make an investment and things change. I've had that happen with quite a few investments of mine before. And look, sometimes the prices of those assets went on to make higher highs from the point that I sold them. But that did not change that my reason for investing in this particular cryptocurrency had changed. And I no longer wanted to hold that asset because the reasons why I invested in the first place, I no longer had faith in the team. I no longer had faith in the product, whatever it might be. Things change. It's not because the price changed, it's because what they were doing changed. It's because my investment thesis had been broken on that particular asset. And that's okay. And do keep in mind too that if you are registering a loss on an investment, that you can do a bit of tax harvesting with that, so you can use that as a tax write-off. So do keep that in mind, that you shouldn't be afraid to sell these positions necessarily if you have lost your faith in it. And again, that's not because of the price going down. That's because something has fundamentally changed with your investment thesis. That is also part of protecting your capital. It's a trickier one, and I know it can be hard to say goodbye sometimes to these assets, but they are, after all, just investments. They're not your friends. They're just investments. Another tip here for you is to compound your freaking gains. Far too few people are taking advantage of the incredible opportunities right now in the cryptocurrency market to make incredible returns. Your average millionaire has like 7 sources of income. How many sources of income do you have right now? Think about that. Because with crypto, you have got incredible opportunities. You can be putting your dollar stable coins, right? So you've taken profits on your altcoins, you got your capital back. Well, you can take that money, put it into a centralized platform like BlockFi to earn 8.6% on your dollars. Maybe you want to go with a decentralized finance option like Wire and Finance. We're going to earn 15 or 16% on your dollar stable coins. You can take your Bitcoin and your Ethereum, lend those out somewhere as well, put these assets to use. Of course, if you have a coin that can be staked like Polkadot or Elrond or Cardano, you had better be staking those damn coins. Otherwise, you're losing money. That's free money that you're just throwing away by not staking it. So you got to get those multiple sources of income coming in through crypto here. There's so many opportunities. You're spoiled for choice, to be honest. So do make sure you're taking maximum advantage of that, compounding those gains that you're making. And of course, as I always say, until you have clicked on the sell button, nothing is real. All of those paper gains that you have right now can dry up real quick. And I think that the last week in the market has probably hit this home for a lot of investors, except that they didn't click the sell button at the right time. You see, what a lot of investors do is they FOMO in at the top, and then when things start going bad, they panic sell and click the sell button at massive lows, right? So people are selling when their asset is down by 30, 40, 50, 60%, which is exactly not the time to sell. That's the time generally to be buying an asset. So just keep this in mind for the next time the market is pumping like crazy. You sell on the green days when your asset is up by 200% in a week, or you're up 20x on your investment that you made a few months ago. Don't be afraid to just cut a little bit of that off. You don't have to sell everything all at once, but until you click on the sell button, you never make any money. And to be clear, there's lots of things you can sell into. Maybe you just want more dollars, so you take your profits into USDC. I take a lot of my profits into USDC and then put them into platforms like Wire and Finance or BlockFi. I take a lot of profits also into Bitcoin, right? And then put that earning as well, or some of it just in my cold wallet. I also take some profits and put them into the stock market. I put them into precious metals as well. That way I am protecting my wealth long term by reducing my risk in these highly volatile altcoin positions. But you want to sell when they're pumping, not when they're dumping. So if you are sitting right now on a bunch of altcoin bags and you're feeling like, man, I need to capitulate now that they're down 50 or 60%, if you studied and had a plan and all that stuff, then you should theoretically be waiting for the next good market pump in order to shave off some of those positions, not necessarily capitulating at a massive loss. Anyway, those are just some of my thoughts, to help you, I hope, be able to stop losing money in the market. There is no silver bullet for this, unfortunately. I would love that I could make it so that everybody can just make money and never lose any money, but that's not the reality of markets. We are investors, we are risk takers, and when you take risk, well, sometimes you can lose. The question is, how do you minimize that risk and maximize your potential for success? I hope that some of the things I mentioned in this video will help you do just that. Anyway, your question for today: if you are a beginner, what one thing do you really have trouble with? And if you've been around for a while, what one thing has helped you the most in building your wealth? Let me know down below in the comment section. Thank you so much for watching today's video, and peace out till next time.